Nancy Novak?
Yeah.
That was a couple of weeks ago.
Oh, was it a couple weeks ago? She and I went to go see Hustlers last Friday. Hustler, the new Jennifer Lopez movie.
Okay.
About the
And this is
Colvins.
recording as well, right?
Jennifer Lopez is still a full answer? Oh my God.
Yeah, I already did, yeah. It's live.
As I'm watching them, all I could think of was the core stomach muscles that would be needed
Okay.
to do that. It was intense.
Yeah.
She has said in interviews it's the hardest thing she has ever
Really?
done. Yeah.
Oh, I just got something paid for something.
Hey, Nancy. I've known Nancy since we were joint Keller Williams.
Well, you're the one that introduced me to her 6 years ago. Yeah.
She's a really good appraiser. Are we starting, John? What are we
I
doing?
think we're ready to go.
Thank you.
Hi. Oh, yep, you're live. You're good.
Okay, thank you.
Okay, so it's 5:30, right? Diana Kokoska says, well, Mr. and Mrs. Stellar, we had an appointment at 5:30 and it's I think it's going around.
Okay.
Oh, sorry.
So does everybody know each other in the room? I'm thinking maybe not.
Michelle.
So Eric's our newest in the room. Eric, your last name is Gastaitis, right, Eric?
Yes.
Okay, so Eric's working with Tony and Rhonda.
Welcome, Eric.
Hi, how are you?
Michelle, you joined us a couple weeks ago?
Yeah.
Okay.
Yeah.
And you're working with Nancy?
Yeah.
Kind of mentoring?
Yes.
And Lee, you've been here now for a couple of months, but you've been kind of MIA a little bit.
Yeah,
right?
it's kind of a couple months, but this is my first day, kind of thing.
Okay, all right. And Rose,
I've
you,
been out of the loop for a while,
you've
so
been out of
I'm
it for a little while? Yep. We get back into it?
getting back into it, yeah.
And so not as a property manager, but she also does some sales, right?
Okay.
Working on
You've
sales,
been in real estate how long?
16 years now.
16, wow. So she probably tops the room, I think.
Yeah.
Well, you've probably been in mortgage business longer than that, right?
32.
Oh,
Wow.
jeez. And everybody knows John probably, right?
Yeah.
John's on our ALC. He's, him and John are doing a great job with the what's the committee you're calling it now?
Career development?
Career Development
I always
Committee. And
forget.
that's part, this is part of that, all these classes, and they're videotaping, I think, most of the classes now, so, it's working. So how many of you know Toby? Toby Lynn? Okay, Toby's been a mortgage broker for 32 and in the area probably for about 10.
Full-time moved into Keller Williams 6 years ago.
Was it 6?
6 years ago.
All right. So, so I thought it'd be helpful to have her come and talk about the financing that we're going to focus on tonight primarily. I mean, we can cover any questions you guys have, or if we miss something that that you want us to cover. I'm sorry, that light is just driving me crazy. But I thought it'd be important to focus on the financing because honestly, that's probably the most complicated part of
Yeah,
An area that can be messed up on.
yeah.
to be messed up or maybe even misunderstood.
Yes.
And most pitfalls probably because you have a lot of time deadlines in the process.
Yes.
And so that's why I thought it might be helpful if we had somebody like Toby come in and share her experience with us, okay? So what you should have a contract that's a two-sided copy that's got some sections highlighted. And the reason why those sections are highlighted are because they do pertain directly to the financing aspect of contracts. You also should have a comprehensive rider for FHA and VA, which is a 2-page document. And then there's an appraisal contingency that we should probably all start using more often, right?
And I'll talk about that as to why they really need to be used.
And then Toby had some notes from an actual transaction that she put
Yeah, I was
together.
gonna say, I looked at it.
Okay. So we just thought we would go through that. So if you look at the, you guys all right working off the copies?
Yeah.
Is that okay? One of the misnomers I think of a class like this is people think it's a buyer class
Right.
because it's about financing. But really, if you're listing a property, you need to understand this stuff just as well because first of all, on the listing agreement, you're asking your customer what types of loans that they're willing to accept, right? You're going to put either conventional, VA, FHA, or other. So you need to understand what the nuances are of the different types of loans. So it's not really just a buyer's class. And then the other reason too is when you're presenting an offer, or multiple offers possibly, there's a big difference between a VA loan that the buyer's asking for 6% closing costs versus a cash deal or even a conventional deal where they're putting down 20% and, they've already been pre-qualified. So you need to know all that stuff.
Exactly, and
20%
being
off.
able to understand the way that financing is written in there is important for you on the listing side, so that you can help your sellers make a choice.
Yeah, so don't think of this as just a buyer's class, because, when you do take a listing, you're asking right there on that one line on your listing agreement, you're supposed to indicate what type of financing they're willing to accept. Lots of times, agents don't check anything off, or they check all of them off. Well, they check the 3 off: conventional, FHA, and VA. But quite honestly, the house might not even qualify for VA or FHA, right?
Correct.
So, you want to cover that, what the different guidelines are?
Well, in general, the property qualifications are similar for every mortgage. Conventional, the appraiser is interested in safety, structure, and the condition of the property. FHA might have some additional, for instance, with FHA, the appraiser has to, Nancy probably talked about that a couple of weeks ago. The appraiser has to go into the attic and do what we call a heads above. If you have a listing that is in a price range that would likely be a potential FHA contract, you're going to want to make sure that there's no peeling paint, because that will have to be fixed. Not as much on a conventional. It totally depends on if the appraiser says it
Right.
needs to be done. But it is important because, for instance, if you've had an FHA contract, or even if somebody had the property listed before you and they took an FHA contract and it fell through, that appraisal is going to be stuck with that property for 4 months. So you need to know that, because it might mean you can't take another FHA contract.
VA is the same, right?
Yeah, we do a lot more FHA than VA because you have to be a veteran, for VA.
But it comes with the
It's
same.
similar, yes.
Similar qualifications.
Similar
Yes.
appraisal issues, so you could run into what we would normally call cosmetic issues on a conventional contract, which for FHA or VA, if the appraiser wants to.
It's all up to the appraiser.
Yeah, it's always, ultimately, that's what it comes down to.
And
like-
with that said, I will add that I keep my panel, mortgage lenders have to use a panel of appraisers. And I keep my panel very short. I keep it to 3 local appraisers. And a lot of it is relationship oriented too. If they don't have to say something, they might call me. But that's one advantage to having a small pool of appraisers to go through.
That's why all the time, I don't care who your buyer's using or says they're gonna use as their lender. If they're gonna use their Uncle Bob from back home because they've been banking with them for 20 years, or Quicken because they did it online, you should. And again, from a buyer's perspective or a selling perspective, if you get an offer from an agent, if you got a listing and you receive an offer from an agent and the pre-approval letter is
Bank
from
of
like
Wisconsin,
Quicken or
yeah.
Bank of Wisconsin, or even the big banks like Bank of America, I would almost be inclined to counter that with the condition that they have to get pre-approved by a local lender within 5 days or something like that. Because for that very reason, usually when we see appraisal issues, unless the house is blatantly overpriced
Right.
and the contract's just ridiculous, most appraisal issues come up because the appraiser doesn't really know the market, because they're being hired by some out-of-town or online lender, and that appraiser is probably the cheapest one who took the order the fastest online. And guess what? That's probably because he's trying to build his business because he's not that busy. So he's probably the least experienced guy out there.
They will use a very large pool
Yeah.
on a rotational basis.
Yeah, so when we see appraisal issues, usually that's the case. I got to know Nancy because I had an appraisal issue on a deal down in Front Store Village where I knew that a couple of her comps, one was a Chinese drywall comp, And the other one was, some kind of distressed sale comp, and she wasn't aware of that. But she was reasonable and willing to take my information and then verify it. And then when she was able to verify it, she changed the appraisal. Not all appraisers will do that.
Oh, definitely. And I will say one other thing, if you have a listing that you know you're kind of at the top of the price point, I would highly suggest that you meet the appraiser there for the appointment and that you come prepared to show them how you got your price with some comps so that you can deal with that up front, because it's real hard to get a change afterwards.
In a nice way, though. You don't want to be a jerk
Yeah,
and
right.
say,
Absolutely.
here, these are the comps you should use, you know, 'cause
Absolutely.
then they're gonna push back and they're gonna try to prove you wrong, right? So you just wanna kinda in a friendly way say, hey, I was
Absolutely.
thinking this might be helpful, might save you a little bit of time, whatever. I mean, saying that, I have gotten some appraisals changed when I had good cause for it, but there's other times when, yeah, clearly the appraiser was out of line and they refused to do it because there's like a chain of command. Like if I, as the seller's agent, thought we should challenge the appraisal, and I got to go back to the buyer's agent, and then the buyer's agent would have to go to the lender.
And the buyer would even have to agree
Yeah.
that they're willing to have it.
Yeah.
Because some buyers, I have had some buyers say, well, why would I want to fight for a higher price?
Well, because the seller may not be willing to agree to that price.
And it depends on
The lower
the kind of
price.
price range that you're in.
Yeah. So to get back to the VA and FHA loans, like there are loan limits, and it varies by area as
Yes.
to how much the house will qualify for, or how much VA or FHA loan a house will qualify for. So that's another reason why you need to know that. So if you're going into a listing appointment for a, I don't know, what are the limits? I don't even know what
The conventional limit and the VA limit currently is $484,350.
This area.
And yes, that's pretty much the general. There's some what's called high cost areas. Collier County, I think Collier can go higher. But
FHA, did you say?
well, definitely for FHA. So for conventional,
Well, there's not really a limit for conventional. is there?
yeah.
Really?
If you go above 484,350, it's a jumbo loan.
Becomes a jumbo loan. That's right.
And then the jumbo has different down payment requirements and different documentation requirements.
Okay. So that's, so it
VA.
doesn't matter like if it's in Port Charlotte versus like Northport?
No, not really.
Okay. How about Venice?
Well, in general, that 484,350 is it for conventional. I do think Collier County falls into what they call a high cost area.
Okay. Yeah, we don't
That
do
goes a little
choices.
higher. FHA is 314.
So is this VA?
That was VA, yeah.
Sorry.
Now, one cool thing about VA, well, I don't want to get too technical on the loan part because we're doing, FHA is 314, say, and change.
So that's the loan amount or the purchase
Loan
price?
amount.
Okay, so the loan amount. So if you're going into PGI and you're going into a listing appointment and the house is, well, $600,000 house, I guess with 20% down could still qualify as conventional or VA. But you get much north of that. Well, for one thing, most of the people that are using these products aren't going to be putting that much down.
On that product,
They're
yes,
usually going to just be
exactly.
putting about 3 to
3%.
Anywhere from 0 for VA to 3.5 on FHA.
Yeah, so most of the time, that's one of the reasons why they're going with this is because they don't have to put down so much, right? So even at, say, 500,000, you're pushing the limit if they're only putting down the minimum.
Mm-hmm.
Yeah, so if you went into a $700,000 listing appointment at PGI or wherever in this area, and you started suggesting that they might be able to do a VA or FHA loan, that's probably unlikely to happen. And if you're not aware of that, you might not look like you're knowledgeable about what you're doing, okay?
And that's why understanding your contract is really important, because if you're on the listing side and you get a contract for a $700,000 loan, we got one about 3 months ago. It was, I'm making up the numbers now because I don't remember them, but it was maybe a $700,000 home, and the loan that was written in that everybody signed off on was 550 or so. And there wasn't enough down payment anyway. As a listing agent, you also need to know from before you accept a contract.
Right, yeah, because you would, yeah, in that case, you'd be like, well, is this, you're not gonna get this loan unless you say, tell me it's a jumbo loan. It's
Right,
not gonna
and then
happen.
once your buyer and seller have signed a contract, you're
You
kind
kind
of out of luck for a
of
while.
stuck
Yeah.
until
Scrambling
the
to
banker
get
says it
something
can't
done.
happen. You're
Yeah.
kind of
Yeah, your
stuck.
house is off the market until they get denied for that loan.
Right.
So it's kind of, it's a waste going
So
into
there's
it.
ways to deal on VA and conventional. There are ways to deal with more on conventional. We just go into a jumbo loan, or we go into 2 loans. VA does allow jumbos, different formula, and as of January 1st, they're taking the limit away.
Are they really?
Yeah.
So the
unlimited.
gist of this is if you go into a listing and a listing, the house is worth, or they wanna list it for $700,000-800,000, FHA and VA loan is not,
VA is possible, yes, but FHA definitely not.
Yeah.
okay.
So you don't check off
Oh,
that box.
right,
when you-
exactly.
You listen to
Okay.
contract.
Well, that's good to know, I
Yes.
did not know that.
So that's another reason why you should be working with a local lender for a couple different reasons. But one of them is you can pick up the phone and talk to somebody that gave them a pre-approval or pre-qualification letter and actually have a conversation about what they're honestly able to purchase. Whereas if you're working with like one of those online banks, I mean, somebody had one in our office. They were trying to just get basic and update on the loan. They couldn't get a hold of anybody to find out what was going on. They weren't getting any feedback. And then even the big banks, there's so many different tiers of underwriting that they go through. It's crazy that you could get down to the day before closing or the day of closing, and another underwriter finds something in their file that somebody else didn't pick up.
Right.
So that kind of,
Happened to me.
yeah.
Happened to me on a refund.
The underwriter right at the day of closing.
9 the day of closing.
Yeah, so again, that's the reason why, whether you're working with a buyer or if you have a contract, a listing, and you get an offer with some weird lender, it was Loan Depot was the one
Oh,
that
jeez. Like home
we had
Depot.
trouble with. It was
Oh, really?
Loan Depot, it was an online lender. We couldn't talk to anybody to find out what was going on. So if you get an offer like that, there's nothing wrong with saying, bring us back an approval from Toby or Keller Mortgage or whoever, and we'll reconsider or whatever. So we know what's going on. So what's the difference between a pre-approval and a pre-qualification?
We got a couple.
Did John put you up to ask me?
No.
I will say that the terminology has become a little mishmashed. I might say, yeah, have them call me and I'll pre-qual them, but what I really mean is pre-approved. What it really means is pre-qualified in general means sounds good to me. A pre-approval is going to mean I've looked at everything. I've looked at the income. I've looked at everything. If tax returns were needed because they're self-employed or commissioned, I've looked at them. And pre-qual, we did a class last week in the office, and we talked about that, and I said I have 2, and this is really important when it pertains to contracts, because if you're working with somebody with a pre-approval or a pre-qualified letter, I always say pick up the phone and call whoever signed that letter. I do have 2 types of letters. One is I've looked at everything, and the other is, I call it the phony baloney letter, which is, I have pulled credit, but I haven't seen anything, and it sounds good based on what the buyer's telling me. And sometimes I get a desperate call for a letter just to say something, that there's been contact, and in that case, I'll do the phony baloney
Oh, jeez.
letter.
And you would consider that pre-qualified
Yes.
letter? Okay.
Yes, and the letter specifically says, but a lot of times you're not necessarily reading what the letter says.
Right.
And you just have a letter that's signed by a lender, and that's why, because on the, going back to the listing side, if you let your seller accept a contract that they can't close on, they might realize that 1 week after the contract, but your seller is out of luck. That seller can't just rescind the contract
And
because
guess who
there's
they're
a
gonna
problem.
blame if it comes back that
Yes.
that letter turned out to be a waste
Oh,
of
wow,
time?
yeah.
They're gonna blame you.
Especially if they let
If
someone
you-
with a real letter,
Yeah.
you know, can't, an offer comes in
Right.
after.
Yeah.
Well, I mean, they're tying the house up,
Yeah.
you know, so they might not ever get that other offer because.
Wow.
So like if you're getting a pre-approval letter from like Quicken or any of those online, I can almost
I say
guarantee you.
anybody, really, even me, you know, even me. If you've got a listing and you got a letter from me, because I was working on the buyer side, pick up the phone and call me. I hardly ever get calls.
But I go to bet almost most of the time, vast majority of the time, those online services, basically they're issuing that letter based on what those people submitted
Yes.
online.
Yes,
They haven't seen any documentation
Yes.
or verified their income or looked at tax returns or probably not even verified their income yet. Right?
yes.
So that's where you run the risk of not looking good to your seller. But also on your buyer side, if you're taking that at face value and you're throwing them in your car and you're running them around showing houses,
That's a really good point from a buyer's side.
you might be burning up a lot of time on a buyer that either can't buy at all or maybe they can buy more. They might be able to buy more once they get it. You know, that's the other side of it. So you could be showing them houses in one price range when in reality you could be showing them in a different price range.
Yeah, a lot of times they'll be mistaken about, like, well, my wife gets $10,000 a month in alimony, but I can't use that. Yeah, you can, you know, and that's a lot of money. You know, one of the ways that I thought the other day after we talked in class, the way that I, from my memory, I think of pre-qualified. Well, the word qualified means kind of like, you know what I'm saying? Oh, let me qualify that statement. You know, I only talked to them. I didn't actually see
Well,
the
that's a good
document.
way to think
Whereas
about it.
pre-approval is like, boom,
Stamp.
it's pre-approved. The only thing you got to approve now is the basically the appraisal on the house.
Yeah.
That's it.
I will say though, which is why I always suggest picking up the phone and clarifying, we do mishmash the
Mishmash the
words
words.
around a little bit.
Well, the other thing that hopefully the lenders are doing, and we are doing too, is just because somebody gets pre-qualified doesn't mean their situation might change
Oh,
from
yeah.
the time they get that
3 months ago.
to now when you're working with them. So if they went out and
Yeah.
I had a customer that was a doctor, so he was a jumbo, right?
Okay.
He was buying a house for like, I don't know, $700,000, and he got pre-qualified through a doctor's program. I think at the time it was SunTrust.
Okay.
Oh, geez.
And between the time we went under contract and that time they got proof of the loan, one of their cars, the lease on their car was up for renewal,
Oh,
right? So they went, took that one in, and got the same exact vehicle, just 3 or 4 years newer. The payments were almost identical to what they had been paying, but because the extent, the term of the lease got longer, it affected their credit number, and it took them down below, what's the best level you can get?
You mean credit
800?
score?
Yeah.
Well, 850 is the highest score.
Okay, so they were probably north of 8, but it just took them down to like 799 or something like that.
Okay, well, that's
So-
still good though.
But it affected their interest rate that they got on the
That
loan.
shouldn't sound.
Well, I don't know. It was the program they were getting into. So,
Okay.
yeah.
wow.
So just something like
Oh,
that.
because
might
it
not-
was a proprietary doctor's program,
Yeah.
so that was on a regular loan, that wouldn't matter.
Yeah.
Okay.
So just something like that, it doesn't sound like a big deal, does it? But,
Yeah.
you know, the other big mistake a lot of people do is they'll go start buying furniture for the house
Yeah.
with those 0 interest, like no payment for a year.
Yeah.
That's the worst thing you do,
We
right?
did a credit refresh today. Lenders are required to refresh credit within 10 days of closing. And it's not actually another whole credit pull, but it's something that the bureaus do for the lenders. And we were dealing with that, it was either today or yesterday, where they had gone out and they've already signed for all their furniture to be delivered. And they still qualify. But now we have to get every account added to the credit report
Oh, wow.
and statements because they're brand new accounts, so they haven't even received the
This is
statement
after
yet.
closing?
No, this is a week before closing.
Before, okay, all right, yeah.
A week before
That's a
closing.
lot of labor.
Yeah, so really you need to let your customers know, don't
Once you
do
get
anything.
pre-approved, don't do anything.
I mean, they should probably even pay off a line of credit or whatever without talking to the lender, right?
We have a disclosure that's part of what they have to sign, and we've added it to our package, and there's a giant stop sign on it, a big red stop
I saw
sign.
something like that.
And it says, stop, don't do this, don't do that, unless you've spoken with your loan officer.
Yeah, so you might think you're doing the right thing by paying a credit card off or something, but that, I don't know why, but I guess it,
Credit.
It's just
When you're
activity.
doing it, when you buy a house, it's gonna hurt you.
Yeah.
so how far in advance before they get pre-approved,
Whatever.
would you say they should kind of get into a normal rhythm with their finances? Like instead of like going out borrowing or
Yeah,
or
it's
paying
not a
something.
black and white answer,
Right,
and sometimes it depends on the file.
right.
If I'm speaking with somebody that's going to look 6 months down the road and their credit score is kind of shaky, I'm going to give different information than I'm going to
Okay.
for somebody that's not in that scenario.
And that's another good point too. Like if you're talking to somebody about when they want to start that loan process, I know I've had it happen to me, like the customers don't want to get their credit pulled or they don't want to talk to anybody because they're afraid it'll affect their credit or whatever. They better off, in my opinion, finding out sooner
Yeah.
rather than later, because you might be able to counsel them on what they can do, right?
Absolutely, absolutely.
Yeah. So, again, that's something, I know sometimes I've had that happen with customers, and if they're not willing to do that, I don't know if I want to invest a whole lot of time in them, to be honest with you.
Right.
Right?
Because there's just so many things that could be awesome and it's great, but I could pull somebody's credit and look at their whole thing. I might have to tell somebody from an income standpoint if they're hourly and we want to keep their overtime up really high,
Mhm.
because that's shaky and they start telling me they're going to be taking time off. Well, that's a red flag. I've got to deal with that.
Right.
If I need every penny that I can get, that I can count
Yeah.
to qualify them. So definitely.
Or there might be something on their credit that shouldn't be there anymore.
And they can
fix it.
Should never
Yeah.
been there.
Yeah.
And to give you time to get it cleaned up.
Yeah,
Yeah.
definitely.
Yeah. So
Okay.
they're all good points. So we got a little off track there.
Yeah.
But
That's a good, I mean, I
Also-
never would have known about the VA and FHA being a limit to what, if the house is worth more than that.
well, I don't know if you heard Toby say, I guess starting the first of the year, they're gonna probably
They're lifting the limit on VA.
lifting the limit on
Right.
VA, and I think we're gonna start to see more and more VAs.
I hope so. I love VA
That are
loans.
coming into the area. So, we didn't see any for a long time, but I think we're gonna start seeing.
And we're
more.
such a big veteran
Yeah.
area. I've been invited to speak next week at the Veterans Officers Association
Oh, really?
to speak there.
We're
So,
having we have a mandatory Hers and Emissions conference every year. It's the second year that we've done it, but we're having it over at the Veterans Museum.
oh,
We will be taping it, so in case you can't make it that day, we'll play it.
I haven't been to the new location
Yeah, it's
yet.
cool. They have like a
And they do
professional
Pastor.
theater. It's like, it sits like 300 people or something, and it's like an auditorium,
Yeah.
a lecture auditorium.
Oh,
It's really cool. So it'll be a real nice venue.
okay,
But,
contracts.
Yeah, so getting back to contracts. So, like we talked about the fact that this just isn't for buyers, but at the same time, you do have an as-is contract in front of you. And I just highlighted some sections on here that are specifically geared towards financing, starting with in item 2C, where there is a line for the financing. And you would be surprised how many times we see contracts that come in that don't have anything on that line. But but when you go to page 2, they have the financing checked off on 8, where sometimes they don't have the financing checked off, they just have some boxes checked off in there. So the first thing is, I would say, make sure you put something on that line if it's a loan. It could be a percentage or an actual dollar amount. Personally, I like using percentages better because then you don't have to change that line if you get into a negotiation.
That's true. Yeah, that's a good point on that.
So that's just, and also with the new programs that we have, like if you change something on here, it'll probably automatically calculate the balance to close.
Oh, I don't know about that.
Yeah, so,
I will mention one thing. I was just telling you earlier that I have a loan that I'm closing next week, that it was a fairly new agent that wrote the contract, and there's a difference between the earnest money and down payment. So he had written in, I think the down payment was going to be $52,000, and he actually wrote $52,000 into the earnest money
yeah.
because they said to him, "We're going to put $52,000 down." And he took that as earnest money.
Yeah.
And they had, according to the contract, they had to actually put, because they all signed off on it, they had to actually put the whole $52,000 into escrow.
Whoa.
So
So
then,
you just want to be careful.
yeah, so then what happens if you get into one of those gray kind of areas where
Yeah.
there's one of the parties wants to cancel the contract?
Something, who knows?
Yeah,
So
it
many
could be.
things.
There's so many things it could be, and then the
Yeah.
one party doesn't, the seller doesn't want to sign off on the cancellation agreement. You know, you might be in a world of,
Yeah, because you got $52,000 in
yeah,
that
you
case.
never want to put that much money. I usually say 1 or 2% as an escrow payment. And I don't usually even put an escrow payment up front. I mean, some agents will disagree with that, but I usually put 3 days after effective date.
Yeah.
Well, yeah, the ones that are the listing agents would disagree with that.
Yeah, exactly.
And what I just did was, it was 80,000 and I put $1,000 as escrow. So he just wired the money this morning because everything was accepted and
Mhm.
everything. So I would never put that much money.
Yeah,
Well, it was a mistake.
Yeah.
You know, it was just a misunderstanding mistake between the buyers and their agent.
So from a buyer's perspective, yeah, you don't want to put a lot of money down. From a seller's perspective, they're probably going to ask, like if you're doing a deal with this Gasitis, I think Tony's going to ask for probably 5%. You know, he's going to recommend that the seller ask for that.
I usually won't want, if the buyer's not willing to put $5,000 down, I don't feel like they're serious.
Yeah.
There's escrow agents that don't even want to deal with anything under $5,000.
Yeah, if it gets into an escrow dispute for anything less than that, the money's going to the attorneys. The lawyers are getting all the money, so it's not even worth fighting over at that point. And if you do settle it, you're going to probably negotiate a split of the money. But I don't like to see too much money put down in escrow. If they want more, if the seller came to me and wanted more money, I'd say I'll put more in when I get my inspections.
When the inspection's over, sure.
That's what I would do. But that's just me.
Yeah.
And you can do that right here if you want to do that. You know, you just say additional deposit to be delivered. That's
After,
2B.
yeah, after inspect.
yeah.
Is it to be or not to be?
No. We're working on this as is.
And it's the blank line that you can end up doing after inspection,
Yeah, right.
as opposed to within 10 days or something like
Well, what
that.
I'll usually do is additional deposit be delivered. I'll usually mirror that with my inspection period. So if my inspection period is 15 days, I'll go with 15 days.
Yeah, I was gonna say, because I'm noticing you're going to be as-is contracts. The last contract class we had was, you gave like the ones that we're using now, the one with the repairs, general repairs one.
Right.
Because that's the contract I used. I didn't.
And there's
use
nothing
that.
wrong with that. The financing aspects of the two contracts, I think, are identical.
Okay.
That's why I didn't understand how both of them.
It's just property condition, yeah.
Yeah, the only difference is what type of loan you're doing. If you're doing FHA or VA, you gotta be aware of the fact that the appraisals could come up with more repairs being required by the lender than what a conventional or cash deal would be.
Oh, I just thought of one thing, if you're the listing agent and you have any loan, just a listing, you can't believe how many appraisals we get where there were receptacles that the switch plate has been taken off, just the switch plate, so the box is in the wall. That's not gonna pass. They need a switch plate, because that's a safety issue.
Now, again, it comes down to the appraiser, because I just bought a house up in Ellington, it was a short sale, and it was an FHA, and they missed the switch plate that was missing. But yeah, but Kelly Ewing's buying a house now, and there was an outdoor cover on an outdoor outlet that was missed. That was the only thing that.
And that could be another $150 trip charge for the appraiser to go back out there.
Yeah, to reappraise
Just
it.
to see that.
To inspect.
Accept a picture.
It depends on the
Yeah,
appraiser.
depends on the appraiser. So not only something silly like that, technically, yeah, you probably should have hired an electrician to go out and put a cover on something. Whereas if the seller
Or just a
just,
switch plate, a 23-cent
No,
switch
that's
plate.
right. Just go to the Home Depot and put one on.
well, once an inspection's done and the inspector identifies things, it says right in there, you should have a licensed professional do the repairs. I mean, I think some people would overlook a switch plate, but there's a lot of other little things like the peel and paint.
Yeah.
If you got peel and paint, you think you're gonna be a VA or FHA, just paint the darn thing before you put the house on the market.
I carry a paintbrush in my car.
Yeah.
And you know what, even if it's just a regular loan and it's not gonna be affected by the loan, from a listing, from a seller
yeah.
side as a buyer, if you start seeing things like peeling paint, you're gonna really start questioning the rest of the maintenance on the home, you know, so it's presentation
Yeah,
too.
for sure. So one thing I didn't highlight was closing date, but this comes back to you need to be talking to the lender. So when you were mentioning earlier that there was a deal where somebody put a 15-day inspection period in, and usually if somebody's tight on cash to close, especially with the VA and FHA, and they're asking for the
Even
seller.
conventional, they're always asking me to hold the
Yeah,
appraisal.
they don't want to order the appraisal until they see how the inspection comes in, because if the inspection comes back bad, then they won't get the appraisal.
$450 for the appraisal.
But the problem Toby mentioned was that the 15 days, they didn't even settle the inspection issues for about 4 or
Another-
5 days after that, or weeks.
Yeah, so I'm 20 days into a contract with no authorization to order the appraisal, because I'm not buying the appraisal. And so I'm, personally, I'm into 5 days for an inspection. You might go longer than that, but just remember that if the lender has to hold off until all that's done, you can almost be ready to close, and we don't have an appraisal.
Yeah, we've seen contracts, not so much lately, but I was seeing contracts there for a while where the financing contingency actually extended beyond the closing date because the agent didn't pay attention to the dates.
Yeah.
So think about that one, especially if you're on the listing side. You get a contract in and you don't check your dates. You assume that the agent on the other side knew what they were doing, and now you get into that process of your seller thinks they're closing on the 30th of the month, and guess what? The financing contingency runs until the 10th of the following month. How do you explain that to your seller?
And as far as just picking October 15th out of the year,
Right.
Saturday or Sunday, if it's falling on a Saturday, Sunday, now you're into a renegotiation. Is it gonna close on Friday or is it gonna close on Monday? Kind of a
Yeah,
thing.
so always check
Check the
your
calendar.
That's like a rookie mistake, I call
Yeah.
it. Like, make sure you're not using weekend or national holiday for your
Mhm.
closing date, because it can't happen, right?
No.
And then I try to avoid Mondays and Fridays too,
Yeah.
because
I do it, mine is on Tuesday, because I was told by Kevin not to do it Mondays or Fridays, so I said, okay, we do Tuesday, Wednesday, or Thursday, so we did it on Tuesday.
yeah, so I.
That is better.
And then I
That is
try
a
to-
smoother
And I
timeframe.
said not the last day of the month.
Yeah, I try to avoid the end of the month too.
Yeah, that's why I made it into like,
So if
you know,
there's gonna be a problem, it's gonna show up as the end of the month or a weekend where something didn't get shipped out, that was supposed to get shipped out, and now you're kind of stuck. Where somebody couldn't get their funds done on a Friday, so now they're scrambling on a Monday to try to get the money wired, and if it's like a foreign, like a Canadian or something with foreign money.
Those darn Canadians.
I mean, they should have their money in.
I'm married to one, so I can say
That's
that.
But even any foreign funds, if they're using foreign funds, that's the other reason why you want to get a pre-approval letter too, or a proof of funds. Because if you find out the proof of funds is coming out of an IRA or some kind of investment account or from outside the United States, there's probably going to be a little more time involved in getting that money liquidated and get it to the closing agent.
And
So-
extra documentation. And I'll tell you, I'm working on a loan right now. I think I got the contract in 10 days ago. It's a 30-day closing, great. I just found out, I think it was last night, as I was speaking to the buyer, that the closing date that they made corresponded with him coming back in from 2 weeks in Italy.
Oh, geez.
The day, so they're closing the day after. He's going to be in Italy for the last 2 weeks.
Yeah. Yeah, that's, we see that once in a while where somebody's going on vacation, they're writing up an offer, but they're getting a loan, and the next thing you know, they're on a cruise ship,
Yes.
or they're out of the country for a couple of weeks, and they're like, really, you guys
Okay.
could have worked the timing out around this a little bit better?
Because we're going, oh my God, because a lot of times in the last 2 weeks, you need something, the loan's being underwritten, we're trying to get it cleared to close. And they're in Italy
Yeah,
Hmm.
and
or on a cruise boat or something.
and a lot of companies, I don't know about you, but a lot of companies, the underwriter that starts the package isn't the one that gives the final approval.
We go we're the same,
Same person.
yes.
So that's a big
We
deal.
own the file, yeah.
Because a lot of, especially the big banks, what they'll do is they'll have some junior underwriter or something.
Yeah.
Look through to make sure they think everything's there, and then
Senior underwriter catches something else and.
like the one underwriter might think that the fact that the guy's changing jobs but he's still in the same field, he's just moving to another location, might be okay. But the senior guy might say, no, he's got to be there for 3 months or 6 months before he's going to be good to go at that new location. So you just never know. So again, that's why you should know your lender. You should be able to pick up the phone and you should be able to ask them, okay, how much time do you need for closing or for the financing approval?
Is it okay if my buyer is out of the country for most of the time that you're processing the loan?
And another thing is, what have they looked at? If you got a pre-qualification letter, a pre-approval letter, okay, have you verified their income? Have you seen their tax returns? Have you pulled their credit? That's the 3 things I always ask for. Is there anything else?
And there's stuff this is why the 2 weeks prior to is because there's stuff that comes up. We run, after we bring a loan in, and we means every lender, run these reports. Ours are called Fraud Guard, Nexus, Lexus, I think is one. But there's all these backgrounds, and we can find out something that really isn't necessarily relevant to the loan in reality, but we can find out there was a divorce that they own joint property on, and now we need more documentation for that. So there's all these things that can potentially come up. So what Jim's saying about what have we seen is
Yeah, so
is
you just don't
definitely
know.
right
So,
in timing that closing.
so you want to find out from the lender, how much time they need for the loan approval, how much time they need from the loan approval to closing. That might also be a title agency question, but if there's
I have
something you
one.
should.
This is by personal experience when I purchased my home. We were going into closing, and the day of closing, they were telling us that we couldn't close yet. And I'm like, why? What's the problem? Apparently they had found like an open credit line from a
That
mortgage
could come from a
was
credit refresh.
because the mortgage was paid off.
Uh-huh.
But there was a credit line open still that wasn't closed out. There was no money due or anything, it was just a zero balance, but they never closed that out. but there's.
That should have been cut a long time ago.
Right, and,
Earlier in the
right, but the
process,
part,
yeah.
what really got me was the bank that it had a credit line was a defunct bank.
Oh, that just adds to the problem, yeah.
And I mean, it just
Yeah.
wasn't there anymore, so
Yeah.
it just delayed
But that
it.
doesn't mean the loan didn't get sold, that
No.
there wasn't still a loan
No.
out there.
Right, exactly, but it took about another couple more days really before they found the issue and we had to close it up, blah, blah, I could get the letters out. But, you know, that was just another personal for me that I can remember that could happen also.
And one other thing I just want to point out, because it's run into it a couple of times, and you can catch this early. You don't want to run into this rookie mistake, and that is, and this is title and lending. If your couple is going to doesn't want one of them on the mortgage, they can't be on the deed. So in other words, if husband and wife, but my wife, she's had some sketchy stuff in the past, I don't want her on the mortgage.
I would disagree with that. We can
Yeah.
put a spouse on the deed that is not on the mortgage.
Have you been able to do that? Okay, I was
Absolutely, we do it all
told
the time.
not to do it. I was told not to do it because the bank was like, no, because then we
That could
can't
be
go
a
after.
lender overlay.
Yeah, because the lender couldn't go after that other spouse.
No, we do it all the time. I took in a loan right now from somebody, I've been doing loans for about 20 years or so, and we're putting he's the only one on the loan, we're putting his wife and his mother on the deed, because it's actually gonna be a home that the mother lives in. So that could be a lender overlay, that's possible.
So, and one of the reasons why you should be aware of what contracts you're using, like if you look at the bottom of these contracts, at the bottom it says REV revision 619. You want to make sure you're working with a recent revision, because you'll see occasionally agents come up with some contract that they pulled out of a drawer that's been sitting in a drawer for 4 years.
They're online. You can actually,
Oh
unfortunately,
yeah, you can still find them online. I
you
mean,
pull them up by
the
accident.
reason why that's important is
My
if you look
KW.
at page 2 of the contract, the very first paragraph talks about if paragraph 8B is checked, which is a financing paragraph, and closing funds from the buyer's lender are not available on closing date due to the Consumer Finance Protection Bureau closing disclosure, which means they have to have their documentation to review 3 days prior, right?
I'm sorry, I was looking at something else. This is a contract that closed a couple months ago, 2019, and I'm just looking at,
Yeah, this one says revision 417.
and it was in
Two-year-old contract.
2019.
So you have to be careful when you're pulling those. Hopefully with the new command, once that's
That's
fully in effect,
confusing me.
it'll clean up a lot of this stuff. But if you go to
Those
the dot
views.
loop right now, I think, or transaction desk or anything, you're gonna find a bunch of old
There's
documents.
documents from 2014 in there.
And we don't look at that, we're just going by the contract, so we
You
would
still
never
go
catch
by
that.
the CFPB, the
Yeah.
disclosure, which means they have to get their
Oh, yeah,
documents 3
yeah.
days prior, right?
Yeah, yeah.
So if you're using an old contract, that's not gonna be in there, and that could cause some confusion. I'm not saying it'll totally
We
kill the
have
deal.
to do it, though, we
but
don't
it's
have
still-
any choice.
Yeah. But it might create some confusion because this contract addresses it. If if they didn't meet that disclosure deadline, then it says what happens, that the closing date shall be extended for such period necessary to satisfy those requirements, provided such period should not exceed 10 days. So there's a limit in this contract. The other contracts don't talk about it because it didn't exist back then. So that's important to make sure, if you're presenting a contract to your seller and it's not this, and something happens, again, you're gonna look like you, oh. All right? Now, obviously, the financing paragraph 8 at the bottom of that section is all about financing, right? And again, that's why you should be talking to the lender, because you need to know, are they getting a conventional loan, a VA loan, a VA or an FHA loan? Or could they be getting something else? Around here, you can get some USDA loans, right?
That would fall under FHA, but we
Would
do
it? Okay.
non-conforming loans, so
Okay.
that's where other would
Okay.
come in.
All right, so, yeah, like jumbo, I guess, would be.
Jumbo
might an
would be
example.
other, non-conforming would be
Okay.
other, yes.
So you need to talk to the lender. That information's not always on the pre-qualification letter. It might be, but not always. And then, of course, the second blank there, you need to find out how much time they need for loan approval. I mean, if the lender knows that the person's getting ready to jump on a cruise ship for 2 weeks, and they're gonna be out of communique for 2 weeks, you might need a longer approval time.
Or if you leave it blank, but you're closing in 30 days, well, then you just left the whole contract open for that 30 days to the loan.
Yeah, and again, as a seller's agent, the listing agent, that's not gonna,
That's killer.
it doesn't look good when things don't go according to schedule.
If you
And
check
then
off,
you have to explain why you let that get past you.
if you look at the fixed or adjustable and you go, oh, well, we'll just check off fixed and or adjustable. Well, now if your client isn't going for an adjustable rate mortgage, they want it fixed, but they get approved for an adjustable, now they're in trouble.
I mean, personally, I always put fixed. I mean,
It's the hardest to get, so you might as
if I
well.
get, the lender says to me, no.
Well, with the rates being so low right now, there's no reason to get an adjustable
Right.
rate right now.
But like John said, you put fixed in there, it still gives them that, they can go get an adjustable loan if they want to. It's just that if they can't get a fixed loan, they can get out of the contract. And then, you know, like you said something just a minute ago, with rates the way they are right now. Yeah, everybody is like loving these rates right now, but with the political
Turmoil.
environment in the world, there were times when we were seeing rates jumping like from day to day sometimes, depending upon what was going on.
They've gone up 0.25% this week.
Have they?
Yep.
Okay. So yeah, so if you don't talk to the lender and find out what interest rate they expect to get them for that loan, and then all of a sudden it comes to the date when they gotta lock in their rate, and that happens to just be a day where something weird happens.
I mean, we just had the oil thing happen.
Yeah, the oil thing. So, you know, you could end up putting if you leave that blank, you could put your customer in a position where they're having to pay a lot more higher interest rate than they would if you had put the rate that the lender gave you when they first pre-approved them.
I can't remember ever getting a contract down here with a rate filled out.
Really? See, I always put the rate in. I figure, even if I didn't talk to the lender, because that did admit there have been times when I didn't, but if I had an idea what rates were, I mean, what the normal rate was, I'd pick a rate, I wouldn't say something ridiculously low, but I'd pick a normal rate that maybe gave a little bit of movement.
You gotta give movement. The guy that's going to Italy for 2 weeks before closing, he refused to lock in at 3 5/8 because he was waiting for them to go down.
Oh, now they're going up.
And they're 3 7/8 right now. His contract was written for 3 5/8 because that's what they were the day.
So if he wants to get out of the contract, he can,
Yeah,
right?
yeah, you always want to pad that interest rate.
Yeah,
Yeah,
like
but
right
if-
now I throw it at 4% just so that
That's what, I mean, personally, I would go up 0.5%.
Yeah. this way there's some wiggle room, but they're not going to get
Yeah.
into some kind of crazy situation. where,
Right.
Well,
So-
we'll only loan to you at 7%. Your guy's stuck.
Right.
You don't want that. But you know, the all that has to happen is the price of oil doubles overnight. Okay, now the consumer price index goes up, and the Fed looks at that and goes, inflation. We better kick the interest rates up because we want to stop inflation, right? So all of a sudden, one morning you wake up and the new interest rate is 5.5, and you know,
I don't even
obviously
think
you
it
got a
takes
problem.
the Fed to do that. I think that could just be market.
Yeah, absolutely. I call
Conditions.
1994 the year I couldn't drink water because I didn't have time to go to the bathroom because rates went up 2%. I
Time to go to the bathroom.
didn't have time to go to the bathroom.
Yeah, so the best thing to do for your customer is put a rate in there. Don't leave it blank because you could run into some weird situation.
And if it does go up over that and they still want to take it, they can
Fine.
still take it. It just gives them an out. It just gives them the out that if the rate
Yeah,
goes over what
yeah.
you put in there.
Same thing with the term of financing. I mean, I usually just use 30 years. I guess if they want to do something shorter than that, they can do that. But
Yeah, I think 30-year default is,
that's okay. But
Yeah.
I still like to fill in the blanks. I don't like contracts that have blanks, just defaults to everything. I just think I think when we close deals, we get paid
Well,
a lot of money,
I
quite
know,
honestly.
I've been filling in the blanks, like you said, and I showed to my son. I was like, man, just double check I did everything right, right? And he goes to chat, says, no, this is not what Jim said, you know, just leave it alone.
Well, I just think, we be professional and to take a little more time and
There's a blank,
Take that
there's a
extra
very good,
step,
if you've got the disc profile that we talk about in here, if you've got a high, what is it,
see.
high C, they're gonna be like, why are there all these blanks?
Yeah. Yeah, great point, John. Yeah, so if you're dealing with a seller, that's a high C is somebody that's like really detail oriented, like an engineer, or accountant, or somebody like that. They might question the
Loosey-goosiness?
Yeah, the loosey-goosiness. Yeah, exactly. So, and if you're the listing agent and you walk into a guy like that's house and present an offer to him like that, and he starts questioning it, he's gonna start questioning your professionalism or attention to detail. Yeah. So I like to see them filled in. And then the mortgage loan application. Again, on line 91 where it says buyers shall make a loan application for financing within blank 5 days.
I want to clarify the technicality of an application.
Okay.
It is not a pre-approval, it is not a pre-qual. Technically, an application from a mortgage standpoint has to have, in order for it to be considered an application, it has to have certain information filled into it. And a pre-qual doesn't have that because it doesn't have the address of the property. Technically, it has to have the address filled in and all the terms for it to be an application.
Okay.
Going back to Italy, guy.
I have a guy that I had the same problem. He thought that pre-qual he had was his application.
And
I'm
that
like,
is,
dude, we're falling like way beyond, when are you gonna do this application? It's like, I'm already approved. I'm like, no.
no,
You're not.
no, absolutely.
Yeah.
And on Italy, guy, I had the contract. I need to disclose the loan. I need to have the information I need to disclose the loan to the borrower for this to be real,
Yeah.
for this.
Right.
And I told him, I said, if you don't let me finish it by tomorrow, I'm gonna have to let your agent know that we're out of compliance, because I don't want somebody.
Yeah, right.
That's what's gonna happen to his deposit.
Yeah, because he didn't fulfill the obligations of the contract.
And technically his application.
And technically, he's in default, so then if he can't get the loan or for any reason that the contract doesn't close, the seller could probably make a claim.
He didn't do what he was supposed to
Yeah,
do.
because if you read the rest of that part, that
Yes.
says, buyers shall make loan application for the financing within 5 days after effective date and use good faith and diligent effort to obtain approval of the loan meeting the financing terms and thereafter to close this loan. So in my mind, we've done that quite a few times actually when we've had our listings tied up with buyers that we found out sometimes they change lenders midstream, they go out and buy the furniture before they get approved, they do something crazy, and we're advising our sellers that I would make a claim for the deposit.
And the next paragraph,
They can be forced to comply. They can be forced to buy the property without a loan, cash.
If they've got this assets.
Right.
the next paragraph says, for purposes of this provision, diligent effort includes, but is not limited to, timely furnishing of documents and information, paying the fees and charges requested by the buyer's mortgage broker and lender in connection. In general, I'm going to have a fair amount of what I need up front, but we have a large population that the folks have come here on vacation. They didn't bring anything with them. They're not necessarily high tech. And I've got to wait 2 weeks for them to go home to get their documents together. In the meantime, my 30 days on the contract is taken.
Right, so that's important.
What's important? What is?
Thanks for showing
Can you
up.
start from the beginning?
Oh, yeah, right.
None of it was thinking of you anyway.
No, it's secret to me anyways.
So yeah, be careful that 5 days. Don't just assume 5 days is good for everybody, because 5 days might not be good for everybody. And if they do need to get a lot of documentation together, say they're self-employed or they own their own businesses of some kind, there's a lot more that they need to present. So again, that's why you need to,
Shut it off.
Yeah, I can use that.
oh yeah, we're not even using that. Why didn't I turn that off?
The light, we're both going with the light.
I already said anything.
The light's not
Cause we didn't
clicking.
know if you were gonna use
Ladies
it.
and gentlemen, this is your broker right here. Tim Quinn.
I'm doing the same thing, I'm
Twice.
dodging the light.
But yeah, that 5 days, that could put your buyer in a bad position if the loan doesn't come through or something else weird happens. The seller could make a claim on their deposit. And again, you're gonna look bad. And even if it just falls into a gray area, the title companies typically won't release a deposit. Just because your buyer comes within the inspection period and says, I want to cancel the contract. The contract says they just have to give them written notice and that their deposit will be returned to them. It doesn't say that the seller's got to sign off on it, but guess what? In the real world, the title companies are going to say that the seller's got to sign off on it.
Oh, yeah, because otherwise the title company's talking about
Yeah.
lawsuit.
Sellers
He
could-
said, she said.
Yeah,
Yeah, I mean, I've only had one time where a local attorney, who a lot of people would consider crazy, released the money without having both signatures because
wow.
he was willing to take that responsibility for it. But yeah, so what will happen in that particular case, like you'll want to cancel the contract, the seller's gonna find out that the buyer wasn't in compliance with the terms of the financing contingency. They're not gonna want to give the money back. And then you're gonna have a dispute on your hands, or the title company's gonna have a dispute in their hands, but that people are gonna look to you to try to work it out. And of course, everybody thinks they should be entitled to all the money. So a lot of times those things get negotiated. So if you're making sure you're advising your customer, you should be on top of the customer, talking to the lender. And if the lender's telling you, look, I need the tax returns, right? You need to help the lender get that message through to the customer. Otherwise, you need to get an extension on this. Okay?
Imagine if it was $52,000.
Yeah, for sure.
Right.
Yeah,
Oh my God,
absolutely.
Right.
kill me now.
Yeah, and those things happen.
I know, right?
I mean, it happens. So, yeah, just make sure your customers are aware of this, because if they start playing games.
And here's another thing just about where we are, is we have a lot of experienced buyers, older, and kind of well, I'll do it,
Refined.
yeah.
Refined.
But as in,
No,
we'll all
big
get
deal.
around
I'll
to
get
it,
you.
know it all.
Relax.
Yeah. And so it is important that they do understand they are under contract.
Well, and especially even if there's somebody that's bought and sold property in the past, if they haven't bought or sold property in the last 3 to 4 years, the whole world's changed since then. So what they did in the past has no.
Nothing. I hear it all the time.
Yeah.
I didn't have to give that when I got my last mortgage. Well, yeah, that was awesome times. I wish we were back there.
Yeah. So if you go down to line item 99, it says right there, buyers shall keep seller and broker fully informed about the status of buyer's mortgage loan application, loan approval, loan processing, and authorizes buyer's mortgage broker, lender, and closing agent to disclose such status and progress and release preliminary and finally executed closing disclosures and settlement statements to seller and broker. So I know I've run into this before when I've called the lender up to get an update because I can't get the buyer's agent to give me an update. A lot of lenders won't want to talk to you because they feel like they're not allowed to or not authorized to by the
Well,
buyer.
I would say it might depend on the situation, but in general, you should be getting status updates.
Yeah, you should be getting a status update,
Mhm.
but a lot of, especially if it's a distant lender, you might have a hard time getting a hold of them, or they might be reluctant to talk to you, but the contract gives you the ability to go get information on your own. You shouldn't have to. The buyer's agent should be on top of it and filling you in, period. I would say probably, maybe not weekly in the beginning, but as you get closer and closer to the loan approval date, you should be getting regular updates. Even if it's like, okay, we're on board, you know, there's no open documentation, we're not waiting for any more documentation or whatever the case may be. And then once the loan approval is obtained, the buyer shall promptly deliver written notice of such to the seller, which means that the buyer's agent would get it and they would send it to the listing agent, and the listing agent will let the seller know. So as a listing agent, you need to be on top of that day too, because you should be asking for that. Because if you let it go, then it could fall into another zone where if the buyer is unable to obtain loan approval after exercising diligent effort, then at any time prior to the expiration of loan approval period, buyer may provide written notice to seller stating that buyer has been unable to obtain loan approval and has elected to either waive the loan approval and move forward or terminate the contract. So if you get past the loan approval date and you don't have the loan approval
Commitment,
commitment, then it's deemed to have been received,
right,
right? So then,
right. It's just like an inspection. If you let the inspection period go by, too bad.
right. So then it would be deemed to have been received. So then the buyer couldn't kind of turn back. Now the buyer can't cancel a contract just because they haven't got their loan approval. But if you're the buyer's agent, you need to be on top of that, because if it's looking like you're not going to be able to get the loan approval on time, you either need to do one of two things. You need to get an extension on the financing contingency, or you need to cancel the contract, right? Because if you don't do one of those two things, then your buyer's deposit's going to disappear.
And you know, there's another factor in here, as whether you're the buyer side or well, in this case, the buyer side, you're working with another agent on the other side, and you don't want to.
Burn bridges.
Yes.
So that's a kind of one of the things I hear all the time from agents, especially newer agents, is kind of can't believe that other agent's not doing their job, kind of thing. Like, well, if that's going to be a problem for you, you might want to think about another career, because that's a lot of times the case. Well, you don't want to be the guy.
Absolutely.
Because people aren't going to want to deal with you as much. Like you could present an offer on a house, and then another offer comes in competing, and the agent will say, well, I've dealt with this guy before.
Not so great.
It's not really the sharpest tool in the shed, so I think we should go with this one. So, but if you're on the ball, people are going to want to work with you.
Yes.
So, especially, and then from a listing standpoint, you need to stay on top of the other agents, because if you don't, and in a nice way, I don't mean be a jerk, but you need to have your reminders set up so that you're requesting stuff. Hey, the loan commitment's due in 2 days. Do you see any problem with it? Or when do you expect to be able to get it over to us? Now, if the buyer fails to timely deliver either the cancellation or get an extension, it doesn't talk about an extension. If they don't deliver the loan commitment or the cancellation, then the seller, let's see, what's it say here? If the buyer fails to timely deliver either notice, which is the cancellation or the approval, to the seller prior to expiration of loan approval period, then the loan approval shall be deemed waived, which means the buyer is still going to move forward even though they don't have loan approval. And we're going to assume the loan approval has been obtained. The seller, if they don't get the notices, the seller may elect to terminate this contract by delivering written notice to the buyer within 3 days after expiration of loan approval period. So if you're working with a buyer and you don't get the loan approval and you don't notify the agent either way, whether with an approval or with a cancellation, or really with an extension if your buyer still wants to move forward, that seller, if they know they've got a backup deal, they could just
especially if it's a cash deal.
Yeah, if they know that there's another deal standing behind this guy, your buyer might miss the opportunity to buy that house. Then if this contract is timely terminated, then the buyer they will get their money back if they're not in default for some other reason, which means if they didn't put their deposit in on time, the seller could say, I'm terminating, and oh, by the way, I want your deposit because you didn't get it in time from the beginning. And it gets into like, if the loan approval's been obtained and the buyer doesn't close for some other reason, then the deposit should go to the seller. You start getting into that situation where it's kind of like, it usually becomes a negotiation where usually one party doesn't walk away, at least in my experience. Somebody doesn't walk away with the whole deposit, they usually negotiate some kind of thing. But I will tell you, the one thing that goes beyond this financing contingency that may get your buyer off the hook is if the appraisal comes in
Oh,
short.
let's please talk about that.
Yeah, so the appraisal, what this says basically is you could get past the loan approval process, the end of the period, but if the appraisal comes up short, then that still gives the buyer an out.
Maybe.
Maybe.
Oh,
Because if it's a 90, this is so huge here with the loans that we're doing, finance transactions we're doing with large down payments, large deposit down payments. If the buyer's doing a 95% loan and the appraisal comes in short, well, lender's always going to loan on the lower of the contract price or the appraised value. So anything 95, I'll use as the example. If the appraisal comes in low, if they don't negotiate out of it, the buyer's not going to be obligated because it's a financing contingency if they don't have the money. But I took a contract today. The purchase price is, I think it's $315, and my loan is going to be $95,000. If there was not an appraisal contingency in that contract and that appraisal comes in low,
Right.
that buyer is SOL because
They sell it.
it's not going to affect the loan.
how would you put up an appraisal contingency
There-
on here? Is
we've
there a
given you
spot
an ex-
for it?
There's a place.
So one of the forms you have is actually an appraisal contingency.
Oh, yeah.
Yeah.
So
There's a check.
we didn't used to really talk about this probably enough. So what we're recommending now is if you're going to do an FHA or VA, then there's an addendum for that, right? Which you have. You always have to have that on a VA or FHA.
Right, we're
loan.
not going to finish working with the loan until we have that.
And there's language in there that provides for different things. So we'll talk about that in a minute.
Mhm.
But now what we're saying is, regardless of what kind of loan, if it's not FHA or VA, if it's conventional or even owner financing, or even a cash deal, you can do it. You can attach an appraisal
Absolutely.
contingency to any contract, yeah. And what we're recommending, especially if it's financing, that we should have it on every deal that's financed
Yeah, I would
in
say that.
whatever form. So, and I would say probably even cash deals should probably,
Absolutely.
there's no harm in doing it.
Right.
Now, sellers, we've had sellers that'll push back on that and they won't want to accept that.
And that would tell me that they don't think their house is going to appraise out.
Yeah, so you might get some pushback from that, but just to protect your buyers, because we do see a lot of people that come down here and they're very financially in good shape. They don't necessarily need to take out the loan, but they want to do it just because the interest rates are low.
Right.
So they might put down more money. That's why when I'm doing contracts, I usually don't, if they want to put down 50% or something on it, I usually don't like to see that. I probably want to put more than 20% as my down payment money. They can always put more money down if they
Absolutely.
want. But if you don't make those loan terms a little bit tighter for them, then they might get stuck, especially if you don't put it in appraisal contingency, they might get stuck buying a house for more than what it'll appraise for.
I mean, so for instance, today, $315 purchase price, $95,000 contract. If that, mortgage, if that appraisal comes in for $275,
Yeah.
the buyer has no out. There's no out for that buyer without an appraisal contingency.
Now, you might not be able to get them down to 275 because the seller might think it was just a bad appraisal, but at least it gives you the ability to negotiate something between the 315 and the 275. Because the 275 might not, that's just one person's opinion on that given day, you know? And if the appraiser wasn't a good appraiser, he might have missed some things.
Well, again, that's why I like to keep my panel down to
Yeah,
3 appraisers.
yeah,
that,
You can talk.
You want to know who your appraisers are that are likely to show up at your properties. Now, the only other thing I highlighted on the contract, but we need to come back to a couple of different things. On the last page of the contract, or on the second to the last page, you have that series of addendums. So if you're attaching an addendum to a contract, check the box off. All right? And the other thing I'll say, we say this in every contract class, if there is an addendum that applies to a situation that you're in, use the addendum. Don't go doing your own thing, because chances are the language that they've got in the addendum is probably better than what you would come up with anyway. And it's already been vetted by like the Florida Bar Association.
And if there's an addendum, we know about it in the contract, we have to have it. You can't pick and choose what addendums we're going to
Good
have.
point. So we used to see, and I'm trying to get the agents away from this, but furnished houses, like
Oh, yeah.
turnkey furnished, just furnished.
Only for a cash sale.
Only for a cash sale. Now, what you can do is you can do a bill of sale outside the contract.
Sure.
Don't make it an addendum to the contract that you're not sending to the lender. That's just, somebody's going to jail over that someday.
Well, if it's listed, we have to have
You have
it.
to have it, but no, a lot of times what we'll see is they won't list it, but it'll be an addendum. We had one recently. We had an agent, another agent for another agency on one of our listings. They made an offer, it got executed, there was an addendum, it didn't reference the contract.
Okay.
It was on an addendum form,
Okay,
and it said that the house would be sold turnkey furnished.
okay.
Well, there was no like additional itemization of what was included in that.
Ah,
So when they went to do the walkthrough, the buyer's like, well, what happened to the lanai furniture? And what happened to all the kitchen stuff that was in the house? Well, the fact of the matter is, all that stuff was there when they took the pictures. But between January and March, the sellers moved out, and they took a lot of that stuff with them, including the lanai furniture and the kitchen
and that's
stuff.
pretty loosey-goosey, turnkey
Oh, yeah,
furnished.
absolutely.
What is that? You
So
know, did
then-
I take the good furniture and then went to Goodwill and have
Yeah, so
Goodwill
the
shipped in?
the buyer did the walkthrough, and she started identifying all these things she wanted. And then, our agent, the seller was saying, that stuff, we took that stuff out in March, they didn't even write the contract till June. So it wasn't there. And the other agent, the buyer's agent, couldn't swear that it was there. The buyer, of course, said it was there. And, we just said, you know, it wasn't there, so I don't know what you want to do, but if your buyer doesn't close tomorrow, they're not getting their money back, they're not getting their deposit back. The lady wanted like, I want to say $10,000 for the stuff that was removed. So what we ended up so I had a conversation with the other agent, and the buyer was in the background talking over him. And she said that she did all this research on what turnkey furnished means. And I said, well, ma'am, I'm not an attorney. I couldn't find anything about it. I don't know if you're an attorney, but in my mind, there is no official definition of what turnkey furnished is. So all
So that was the actual terminology in the contract, turnkey.
furnished. And she said, well, I think the agent should have done a better job documenting that. And I said to her, well, I would agree. I think you and your agent should have done a better job of documenting it. So she ended up closing. But yeah, so don't be really careful when you're writing stuff up.
When I did that sale on the furnished condo, what was it, last month? I actually went there 3 days before to make sure that the owners didn't come back, because I knew they were in town. And I went back there and said, whatever you do, don't take anything out, because right now we're in contract. So I went there to make sure that nothing was taken out.
Yeah.
Because I got, I had like a nightmare that night or something. I don't know what it was, but something in me said, better go check the condo.
Well, I think the agents should work together to
You know,
document what's there. Pictures are a great
Nobody
idea.
likes an ugly closing. I mean,
No.
nobody likes
I
an
just,
ugly
no,
closing.
like you get this nervous, jittery things, and that's with me,
To
closer.
wake up in the
When it
middle of
was
the night.
closer to the closing time, and I was like, God, this better not go through, fall through.
Now, the opposite's true too, like if there's stuff there that the buyer doesn't want,
Mhm.
I would put in the contract that I want it to be removed
Yes.
at least
Prior to closing.
5 days prior to closing or something. I go check and see if it's out.
Mhm.
And then if it's not out, me and the other agent are gonna have a conversation, and I'm gonna find out how much it's gonna cost
Mhm.
to get it removed after closing, if it's not gone. And if it's not gone the morning of closing, because I gave him plenty of time to get it out, then we're gonna hold money back to get rid of it. And, you know, a good example, I think, is the one copy Toby provided. So there's this 4-page thing where it's actually an executed contract. Got some initials on the top of this addendum, or FHA. On the 3rd page is additional terms. Seller to contribute 3.5% towards buyer's closing costs and prepaid or prepaids. So again, that's something you should be talking to the lender about.
This was Kirk's
Kirk
contract,
DeVries,
Kirk
yeah.
DeVries. And we worked very closely on this one because we needed to, you know, from a finance and all standpoint. And we worked very closely on the costs
Yeah.
on this one to get that right.
So you need to be talking to the lender to find out, does the buyer have adequate cash to close, or are they gonna need help with this kind of stuff? And if so, you need to know that going into the deal, and you need to know how much help they're gonna need. There's a limit on how much in reality, unless you're getting a really great deal. Like Kelly Ewing in our office is buying a house for $150,000, I think, and we were able to get her like 6% towards closing and prepaid.
That would be an FHA or a larger down payment, 10% or more on conventional, you can get 6%.
But a lot
But the cost cannot exceed, the allowance cannot exceed the actual cost.
yeah, if your allowance exceeds the actual cost, then the seller's just gonna end up with the money.
Yeah, it's just
The
money
buyer's
left
not gonna be able
on
to take
the
advantage of it.
table, yeah.
So be careful before you just state a percentage in there. The other part that you run into is if you bump it up too high, it might not appraise, right? So like in Kelly's case, we got $9,000 on a $150,000 deal, which is, that's a lot of money.
Mhm.
But you gotta be careful that you can use it all. So like,
Otherwise, it is just
Yeah.
lost money.
that's why it needs to say closing costs and I usually say prepaid items, but people have every.
We don't do that anymore. We used to separate out, the contracts used to separate out closing costs and prepaids,
Okay,
and now it's just $1 or a percentage.
okay.
And
I
it
still
goes
think
to
you're
the
safe
total
with the
cost.
closing costs and prepaids. So prepaids would be like your escrow money that needs to go into escrow at the bank.
Taxes and insurance.
Yeah, it might be your first year premium of insurance. I've even used it for
Homeowner's warranty.
homeowner's warranty. I've used it for the inspection fee. I've used
Okay,
it
now,
for
the
appraisal.
only way you can use it for the inspection fee
Yeah,
is if it has not been paid.
right. So you gotta work out a deal with your inspector to be willing to wait till closing to get paid.
Because since an inspection is not part of a mortgage, it's not required by the mortgage lender, we don't even want to see them. If the borrower has already paid it, it is not allowable on that settlement statement to be reimbursed.
Okay, so that's another important reason why you want to be talking to a lender that you're working with a lender you can talk to, because you can have these conversations and know
She'll do the math. And you
the
don't
best
have to worry
situation for your customer, for your buyer, and
I'm going to point out a couple things on the government, the 4-page one that is for FHA and VA. In paragraph number 2, inspections and appraisal, where there's a shall not exceed. In this particular case, it was $200. Now, I will say in this case, the buyers had already done the inspection. They had been under contract. It fell through for some reason. They were back, so they were already locked and loaded on this one. You know, they already had the inspection.
but I get that question all the time. What should I put in that number? And I said, have you talked to the lender?
That is not,
No, I know it's not,
Yeah.
but still, if they're a customer that's short on cash, and they might need some help with repairs.
Okay, so I'm glad we're talking about this.
Okay.
Because there's no credit allowed to the buyer. If this says $5,000 in here, that means the seller's responsible for doing that. There's no credit that can come back.
These repairs need to be done before closing.
Yes. Well, we do get into can't hold an
Or,
escrow,
yeah,
but in general.
But yeah, I see what you're saying. This money is to be spent by the seller on repairs. It's not to be put on the closing statement.
There's no credit. Exactly. And also, I know that a lot of people, to me, this is even after the inspection. So, okay, so they agree on $200 or $1,000 or whatever it is. To me, it's a renegotiation. It doesn't mean that it's etched in stone and the seller's gonna say, forget it, this is gonna cost me $1,200, not $1,000, I'm not doing it. I mean, they still wanna sell their home. And the same stuff that's gonna be wrong for this buyer is gonna be wrong for the next buyer.
Well, that's true, but it depends too
But
on
it
how
does,
tight the
there is a
buyer
limit, yeah.
Sometimes the buyers aren't able to put any more money into the deal. So they're gonna need the seller to take care of some things. But a lot of times, if you wanna really make your buyer's offer as competitive as possible, the smaller is better. So if they don't really need money for minor repairs, I probably would put 0 in there.
And then when the inspection comes back, it could be a renegotiation.
Yeah, depending upon what it is.
Yeah.
The stuff that's gonna qualify on here, that's not on your regular inspection, is gonna be more cosmetic stuff. Because if it's a real
Unless it's a
issue,
soffit that needs to, it could be all kinds of things.
well, but if it's something major, like, say it's the air conditioning systems, or the septic field, or
Plumbing, anything with plumbing.
plumbing, electric, that stuff's gonna qualify under the general,
General repairs.
well, it's gonna qualify if it has this contract. Technically, you don't have to fix anything, but if it's a general repairs and maintenance
Oh,
contract.
I see what you're saying about the cosmetic.
Yeah, like
Okay,
the
okay.
peeling paint, this is where the peeling paint
Yes.
applies. It's not gonna apply to the
Yes,
inspection.
I understand what you're saying
Yeah.
now, yeah.
Or is torn carpet, I think, is another one, or.
If the appraiser says it.
Yeah, it depends. You probably heard, some of you guys probably heard me tell this story. My wife and I, the first house we bought was a VA assumption we bought. When we bought it, everything was fine. When we went to sell it, pass it on the VA assumption, the appraiser that showed up claimed that the addition that was put on before we bought the house, that the dirt underneath the floor joists in the addition there was not enough clearance.
Okay,
So my wife and I were crawling around underneath the house with rakes, breaking out the dirt
How the hell was somebody
under
going
the
to
house.
there?
Huh?
Serious? They would go under there?
They looked, they didn't go under. We went under. And then the other thing was the sidewalk from the driveway to the front door, it had settled kind of pointing to the house, which again, it was fine. We never had any problems with it. But the VA appraiser came and said it needed to be leveled off. So what they let us do was get a handyman come out, and I wasn't living, I'd already moved back east. My wife was getting ready to finish school. They let us get a handyman to put a coat of concrete on it, which I can tell you the next winter in Kansas City,
Just busted.
when they were out there shoveling snow and ice, it wasn't going to be there long.
It was busted when he started.
I just actually won they don't have to do that because it didn't have anything to do with the structure of the
you
house.
screw it, right.
And that was, and it happened to be, actually, this one was a conventional that the appraiser, this was out of town, so it wasn't one of my three. And I debated that, and we ended up winning that because it had nothing to do with the structure.
This sidewalk, there was if you walk, there was a flower bed here, so the water's running into a flower bed, of all things.
Yeah,
And then when you got to the front door, you actually stepped up onto a concrete porch that was like a full step up. So I don't know what he thought the water was gonna do to the foundation of the house, but but that's the kind of crazy stuff you'll run into that this applies to that wouldn't be part of your normally wouldn't be part of your normal inspection issues, right?
yeah.
Okay. So that's something, you need to understand what your customer's situation is. If they have, some cash and doing those minor repairs is gonna be a big deal to them, then it's one thing. If they're stretching every last dollar to get their down payment together and everything, then they're gonna need more help.
Yes. And on this, okay, so in 3, this is where for FHA and VA, you have no choice but to put the value, the appraisal amount. This is where the 285, you can see 285 written in there.
Was that the sale price of the house?
Yes. The appraisal's got to come in, and everybody has to sign this. If you see on the back page, the buyer, the seller, and the realtors had to sign this. So everybody is agreeing if the appraisal doesn't come in at what it should be. And I will tell you that on FHA and VA, it doesn't necessarily mean that there's a very small down payment. It could be that they're going FHA for credit purposes. Maybe they meet the guidelines for FHA, but not conventional, and they've got a down payment, a substantial down payment. That can definitely happen.
And from a listing standpoint, don't be afraid, if you're questioning what you see on the financing approval of pre-qualification don't be afraid to call the lender up and ask them, some questions about.
Absolutely. I suggest that to everybody because, again, on the buyer's side, you don't want to be that agent that didn't really do the job and you look like a hack to the listing agent. And as the listing agent, oh my gosh, the last thing you want to do is tie your seller up for 30 days on a loan that's never going to close.
Wow.
Because they're going to hate you.
Yeah, they're probably going to start wanting to cancel your listing agreement. So, yeah, you don't want to be that guy. Because just as you start to get some attraction on your listing, that's when they'll start, that's
Deciphering it.
especially if it's a new listing and, you're early in the game. I mean, why do that? Tie them up and get them involved with the buyer that really can't get approved for it.
As the Brian Buffini love-o-meter says, close it before they hate you.
So it's getting to be about 7 now. Was there anything else you wanted to?
I think we covered everything I did. I really can't, I think Jim and I both can't stress enough this appraisal contingency
Yeah,
on a conventional mortgage.
yeah, that's pretty much going to be common practice in our office now.
It is so important.
And as a listing agent, well, you probably don't want to worry about it as much. So a lot of times what I'll hear from our agents who seem to have a pretty good handle on, most of them have a pretty good handle on what they're doing. They'll be like, but they didn't do this, or that's not your problem. That's it.
Right.
Stop trying to identify a problem that's not in your customer's best interest. If they didn't do something, then that's on them. You don't have to, you're going to end up doing a lot of things to keep these deals together that you shouldn't have to. But one of them isn't to teach the other agents how to write contracts, okay? So, look, what I suggest is when you run into situations on deals, just take a breath and take a minute and just think about it. And then we can talk about it. It's better, I so much more appreciate it when I get an agent that calls me up and says, hey, this is the deal, this is what I was thinking, what do you think? And I'll be like, yeah, that's a good thought. Have you thought about this? It's just better if you can just take a breath. Don't be the agent that's, your hair's on fire and, every time.
I was thinking about murder-suicide. What do you think?
I was in the back end of an attorney's office once that the clients never came into, and there was a giant sign for them that said, nobody's ever died from a real estate emergency.
Yeah, a lot of our agents, like, are starting to practice really good time management, and they tell their customers, this is all about setting expectations
Yes.
with your customers, whether they're buyers or sellers. Like, they'll tell them, look, I'll take calls up till 7 o'clock at night, and after that, I'll get back to you first thing in the morning. Like Sarah DeRosa's, one of the things she did, she went out and got herself a separate phone to have for business versus personal, and she tells them at 7 o'clock or 7:30, whatever it is, that phone goes off. And if I missed your call, I will call you the next morning. Because she felt she was busy.
Yeah, you get,
I mean, we all know it can
You have to set
become a
those boundaries.
24/7,
yeah.
and we do have to have a life.
But yeah, nobody, if somebody has a financing emergency at 8 o'clock, there's nothing's gonna happen until next morning.
Nobody's
anyway.
ever died from a real estate emergency.
Yeah.
I gotta use that line.
I'm going to mention there's a flyer in the back over there, but I'm doing a class at the board next Wednesday. It's a lunch and learn, so you gotta call Mary Toombs. It's on your calendar.
Yeah, I
the
just got that today, I think.
Oh, okay. And it's Mythbusters, and it really came from all the questions that agents ask me, or telling me that they lost a deal because it was this situation, and I'm going, well, that's not a situation, you know?
Most situations can be addressed as long as they're addressed in a timely manner and somebody's actually thought about it in a calm, reasonable way.
Exactly.
I mean, you can give them options. You know, the problem is a lot of agents, the minute something happens, they go berserk, and then they're feeding that into their customers, and instead of using that as an opportunity to think of what options are available to address that situation, their customers, like, you know, burning up before you can even explore the options. So you got to pay attention to your dates. That's the most important thing on these deals, and don't wait till the last minute. Like, if you know that your inspection period is running out and you haven't gotten the inspection report from the inspector, you know, a couple days prior, that's when you need to start hitting them up, not 4 o'clock on the last day of your inspection period.
Right.
It's-
Right. Whatever calendar functions you use, what Jim is saying is so true, because you're the one that's going to be in the hot seat for.
And that's an example of something where we'll have agents who'll be like, well, they haven't given me the inspection report yet. The inspection report's at 5 o'clock tonight. I was like, well, you know, if they don't get you the inspection report, and not even just the inspection report, they need to report to you what they want repaired.
Yeah.
It drives me crazy when we see agents that just send you an inspection report. You're supposed to figure it out on your own. What I used to do is I would take the summary of the inspection report and discuss it with my customer and say, well, you know, what do you want to ask for? And a lot of times they want to ask for more than what they're entitled to. So I'll inform them that, well, we can ask for it, but that's probably not something they're obligated to do. These are the things I think we should push harder for because I think they qualify. And then send that email with the summary of the inspection report to the other agent and identify the items that we want addressed. And then that's where you get the conversation going. But that has to be done by the end of the inspection period.
Oh, that reminds me. A loan I'm working on right now, the buyer is an older gentleman. The agent is his daughter.
Oh, geez.
And the inspection report got delivered to the buyer, and she didn't get a copy of it. And they were going back and forth, and I called him and I said, again, I'm waiting to order the appraisal, so I need to know if I can order the appraisal. And he said, well, what are the sellers going to do? He was under the impression that they would just send the inspection report to the sellers, and the sellers would just go ahead and fix whatever in there. And I'm going, woo, that's not the way it works.
Well, a lot of agents.
You need to get with your daughter and
Did
get.
she disclose that she was the daughter?
Yeah, oh, yeah.
A lot of agents too, they make the mistake, they think they gotta get the inspection report back and figure out what they want repaired, and then we get estimates. and then report to the seller what they want repaired and how much it's gonna cost and all that. That's not what the contract says. The contract says you get the inspection done, you provide written notice to the other party as to what needs to be repaired. And then the seller, it's on the seller really to figure out how much it's gonna cost. And then
Yes.
report back to you what they're willing to do, regardless, depending upon which contract you're doing. You know, and then, so don't be the agent that thinks you gotta solve every problem before the end of the inspection period if you're on the buyer's side.
That's a really
Well,
good point,
The
yeah.
contract, and I'll show it to you, the contract I wrote up, the offer and all of that, and it came back that they counter offered and whatever. We counter offered that the seller would pay the $2,200 in repairs, knowing that the shower needed to be replaced. And that's how much it was gonna cost. And then the seller came back and said that he wanted the buyer to pay for the title closing pertaining to the sellers. So we kind of made it back and forth where we kind of split the cost. My buyer is splitting the cost of the title closing costs for the seller.
Yeah, there's all kinds of different ways to cut it up, but my point is, you don't have to necessarily provide them with
Right.
a cost for the repairs. That's
That's
what
their-
the contract says. That's really on them.
That's there.
I mean, if you have time and you got somebody to do that for you, that's awesome. That's kind of why I like using
Yeah.
inspectors who are contractors too, because they can actually do that for
Give you
you.
a number.
Whereas a normal home inspector can't do that for you. They shouldn't do it for you. And the other issue was,
When you were talking about timeliness, go ahead.
well, with inspections, especially with inspections, say you get an inspection back and the inspector says, you need to have a air conditioning guy come back and look at the air conditioning system. There's nothing wrong with going back to the seller and saying, okay, well, these are the items we want repaired, and by the way, we want an extension on the air conditioning because we want to get an air conditioning guy out here. So I need 5 more days to get that guy out here. If I'm on this listing side, I don't want to give you 5 days for the whole thing.
Yeah.
I just want to give you 5 days for the individual item that we might need to be further evaluated. What were you gonna say?
I had a situation that just closed, thank God, last week. And this guy has a broker's license. I checked to make sure he wasn't lying, and he does have a broker's license. He was my buyer. Bought the house, inspections, made everybody crazy. Finally got all the stuff fixed that needed to be fixed. The day before closing, we go to do the walkthrough. He starts finding stuff that he wants repaired.
The day before
The day
closing?
before closing, and I go, well, I can ask, but, we're past the inspection period. He said, well, then I'm not gonna close. And I'm like, you're gonna get sued, I'm sorry, but you don't have a legal leg to stand on.
Yeah.
You know,
So that's a good point. Like, if it was something significant enough that
should have been disclosed or
changed,
something.
they're supposed to maintain the house in the condition it was in at the time they got a contract, the closing. I mean, if it's something like I don't know, the hot water heater broke down and clearly wasn't identified in the
Yeah.
inspection report, and now the hot water heater's not working, I think you probably can make a case.
This was
Well,
like
isn't there
some
something in the
the
contract
shelves in the bottom
regarding
of the
inspection
cabinets.
that everything needs to be in substantially the same condition
Yeah.
as when they went
Yeah.
under
But
contract?
you need to be able to say that it's not in the same condition,
Uh-huh,
is my
uh-huh.
point, so.
Right.
If it's something kind of frivolous, that's gonna be.
Yeah, this
hard.
was the shelves in the cabinets, which were new cabinets, but there were no shelves in the bottom cabinets. Well, there's a lot of kitchen cabinets that don't come with shelves in
Right,
the bottom
right,
cabinet.
right.
Yeah,
Well, it had the hole for the shelves, so I want
Oh,
the shelves.
boy.
And like,
Go buy
dude,
your own shelves.
yeah, we really don't have the leg to stand on there,
yeah, you don't want your customers to be crazy. So the walkthrough is a good point. You need to do contract says you do the walkthrough the day before or the day of. So if you go out there a week before and you see stuff like that, really, you're just giving the seller time to take care of stuff before you actually go back and do the real walkthrough. So you're not gonna get off the hook on that either. Right?
Yeah.
So,
This guy almost got trespassed because he walked through
oh.
the property so many times.
You find the best ones.
The seller was,
Does anybody have any questions? Stuff maybe that we didn't cover that? Yeah.
I mean, I did a stupid thing the very first contract I ever did. holy cow. It was okay after that, but my stupid thing was, I was so anxious to sell this house to this guy. I showed him the house, he had the proof of funds, everything. He went and did it, and he called an inspection before he even signed a contract. And I didn't know he had to do that. That was the very first one. I was like, oh my God.
But I think we learned a lot of things by screwing
When
up.
my brother found out, he's like, what are you doing? They didn't sign the contract yet. I said, what do you mean? He you know, he's got the proof of funds and everything. It's you know, we're doing the contract tonight. He says, he goes, you better hope that agent doesn't find out before.
So I'll just leave on this note that, you know, if your buyers are pushing back about getting pre-qualified or giving you proof of funds or whatever the case may be, I would just encourage, just let them know that they're gonna be in a lot stronger negotiating position if you can have that information than if they just go in blind.
And why would you want to waste your
Yeah,
time?
right, exactly.
Right, so but you can't make it about you, so you gotta put it, what's the benefit to them? Yeah, right?
But that was just between us. That was just between
All
us.
right. So did you guys, is this class okay?
Yeah, actually, I like taking these classes because I
Very
learn from them, so.
Good, good. Okay. Well, I appreciate Toby coming out.
Thank you,
Call
Toby.
me, email me with any questions that you have that I can be, you know, there's a lot of stuff that I would not answer because they're real estate oriented contract, but from a finance standpoint, ask me anything I can help you with.
I want to
Thank you
show
very
you,
much.
show you that contract real quick. I'll make sure, I didn't want to pull it up yet.
Good seeing you guys.
Very
All
nice
right,
seeing you.
good seeing you, Rose.
Thank you.
See you.
See you.
Good seeing you, Lee.
Same here,
All right. So what, you been traveling or what have you been doing?
I was in,
Hi, Toby. Nice to
Here
see you.